Hello and welcome back to our YouTube channel. Today we have for you a stock in the housing finance segment. We feel that this entire segment is highly undervalued right now, and the highs that all the segment had reached in and around 2017-18 is about to come back. We feel it has been neglected by the entire market for a very long time now. So with the rate cut cycle coming in, we feel this segment is poised for a very good breakout. So we have for you today LIC Housing Finance. We think this stock is highly undervalued at these prices, and with the imminent rate cut cycle coming in, we feel that this stock will do well for all our investors. Basically, LIC Housing Finance is the biggest housing finance company in the country, and with a asset under management in and around 3 lakh crores, and with a loan book that is the best in class, and with a parent like LIC backing it, we feel that with the rate cut cycle coming in, this will benefit the most. Also, the stock price has absolutely done nothing for a really long time. So we feel that if we have a position in the stock, it will give us very good returns in years to come. Now that you know what stock we are going to talk about today, let's look at how LIC Housing Finance has been doing. The market cap of the company is around 29,000 crores, and the current price is around 545. The high and low being 827 and 530. So we can say that the stock is trading at the lows right now because of the recent market correction that we are seeing in all kind of sectors. And if you look at the PE, it is at 5.81. This is something really cheap, guys, with just the book value around 611. See, the book value is at around 611 and the price is around 545. So this is how cheap it is right now. The return on capital is around 8.79% and the return on equity is around 16.2, and we have the peg ratio at around 0.4, which indicates that the stock is completely undervalued in terms of the growth that the stock or the company has been giving us. If you look at the chart, if you look at the 5-year chart, you can see that the stock has been going around 400 to 500 levels for from March of 2020, and now recently it reached all-time highs in and around 795. But due to the recent market correction, it has been beaten up, just like all the other stocks have been beaten up. So if you look at the current stock price, it is again in and around 540 levels, which is the same level that it was in and around last 5 years. Even if you look at the 10-year chart, you will see that it was dilly-dallying around these levels even in 2016. Then it had a high of around 760 in and around 1718. This is the time that all the housing finance companies did well, guys, and now the same thing we expected to happen during the course of 2025. So after making lows of around 200 and 300 in and around 2020, the COVID correction is again dilly-dallying around 500 to 600 levels. So if you look at the quarterly results, you can see that the revenue has been increasing consistently from 5,000 crores to in and around 7,000 crores from 2021 to 2024. You can see that the profit and loss has been increasing as well. The revenue has increased from 14,000 levels to around 27,000 levels from 2017 to 2024-25. Even if you look at the net profit, it has grown from around 2,000 crores to around 5,000 crores. So the last high it hit of around 700 was in and around 2017 to 2018. If you look at the net profit then and the EPS then, it was around 38 to 39. Now it is around 93. So we can say that the stock is very, very undervalued at current levels, and we can expect a very good stock growth from these levels as well. So even if you look at the sales and the profit growth, it has been growing at a moderate and a modest 11 to 20%. Even the profit has been growing around 15 to 20%. But the stock has absolutely done nothing for the investors for the last 5 years. So if you look at all these financial metrics, you feel that the stock is very, very undervalued at current levels. So let's look at other things that the stock has to offer now before we make our final decision. We want to show you some of the key ratios in this company. The gross NPL is around 3.55 percentage and the net NPA is in and around 1.9 percentage. And if you look at the net interest margin, it's around 3 percentage. And we can see that constantly the ratios has been improving from the year 2020. But this is not the best in class gross NPA and net NPL ratios in the segment. There are housing finance companies which are, doing much better than this. But considering the valuations currently, we look at these ratios to be okay. And also, the company is very committed towards improving these ratios uh, even better than what it already is. So if you look at the loan book right now, the individual home loans comprise 85 percentage compared to 77 percentage in 2020. The non-housing individual loan book is around 10 percentage, and the builder project loans, which the builders take to complete their projects, that makes up to 5 percentage of the loan book. So the company over these years, if you notice, has shifted its focus on growing its share of the individual home loans rather than the risky non-housing or even the builder project loans businesses. So this has been seen as something really good that the company is doing, and we feel the stock market will reward what the company is doing as well. If you look at the distribution network of the company has around 310 marketing offices across India compared to 282 offices in FY20. 43% of these branches are located in top 8 cities of this country, and it has around 9 regional offices and 23 back offices, 44 cluster offices, and a representative office in Dubai. The company is also distributing all these products from 46 branches of its subsidiary LIC Housing Finance Limited Financial Services. This is a subsidiary of LIC Housing Finance, and the company has also been using this network to distribute its products. If you look at the customer profile, salaried is 88% of the borrowers, and the self-employed is 12% of the borrowers. And the average ticket size of the loan is around 12 lakh. So if you see all these metrics, you will feel that the the housing finance loans that this company is giving is much towards safer side than towards the risky side. If you see that 88% of the salaried employees are taking loans, that means it is more or less secured, and the average ticket size is also not big. So even if somebody defaults, it is a much smaller ticket size. So it will show up as an NPA in a much smaller manner rather than giving crores together and having a bigger average ticket size, which will result in a higher percentage increase in NPS. Besides this, the company is also forwarded into digital transformation where it wants to onboard customers through its digital app Fomi. Since its inception, it has done really well, and the company says that around 33% of its home loans are now dispersed through the Homi app. This tells us how the company is focused on digital transformation, where it can sit in a single office and operate multiple geographies through the digital app. So this is one more thing that the company is doing. Apart from this, there are a few asset problems, the recovery problems that the housing finance has. So it expects to form a ARC. ARC is nothing but a asset reconstruction company. It either wants to form a ARC or maybe give away those stressed assets to a already existing ARC and give it away at a discounted price so that it gets those money from these asset reconstruction companies, and then again it can put it back to the business and start giving loans again. So this is the strategy of LIC Housing Finance as of now with the stressed assets. uh, that is okay. I mean, as of now, the stock is okay with the asset reconstruction idea as well. Besides this, some of the things that the company has told us is it is planning to grow double digit in terms of housing finance loans. It also wants to have an affordable loan category wherein which the margin accretive loan segment comes in, wherein which the competition is slightly lesser, but the risk is slightly higher. But the company wants to foray itself also into this. Also, the company says that due to the rate cut, and also due to the tax cut by the FM during the recent budget, it will also help the people have higher ticket you know home loans, and this, the company says, is positive for the company, which we also expect it to be. Apart from this, the loan book has been growing at a very healthy pace. And one more thing about this company is its highest concentration in two different cities, that is Hyderabad and Bangalore. The company says that it has around 35% exposure to these two cities, but the the growth in these two cities has been hindered due to some of the things that is happening locally in these two geographies. In Bangalore, it's more about e-Khata, Bangalore, Mysore. The Karnataka government has been facing problems with the e-Khata issue, and this has been affecting the loan growth of LIC Housing Finance as well. But the government has assured that this will be solved in this quarter, so I expect the loan growth to improve in the next coming quarters. Besides this, the company is looking to grow its loan book through its foray into tier 3, 4, 5 cities, where it expects less competition from other housing finance companies. Because of its parent company LIC, it holds a very strategic advantage because of its dealer network. So it has been able to use this dealer network and grow exponentially. And one more thing that I wanted to tell you was regarding the recoveries. So the company has already provisioned for it. One, second is appointed a ARC for it. Also, uh, during our research, we found out that it is very easy to get a LIC housing finance loan rather than a standard loan like a SBI loan. Okay, so that is something that we thought was negative for LIC housing finance, because if they're not checking a lot before giving a loan, it is bound to have an asset quality hit on the books. So this is something that we want to tell our viewers as well. So please have your research done before you invest on any stocks that we tell you about. So one more thing that has come to our attention is that IRDII, which is the parent or the regulatory body of insurance companies, has barred LIC from funding its LIC housing finance perennially. So it has set a limit like how much LIC can give money to LIC housing finance. So this is also something that we need to look at. So now LIC housing finance need to look at other places to borrow before they lend it to its customers. So this is also a strategic or a systemic risk that we have seen. So keeping in mind all these things, and also looking at the growth that the company is showing, and the asset quality, and the way that the company is trying to change the course, also its foray into multiple things, we feel that this stock is waiting for a very good upsurge. So if you are getting the stocks at these levels, it will reward you in a very good way. This is what we feel, guys. So at current levels, at around 530, 540 levels, it is looking at a very good spot, also looking like a very good bargain. And we have a target of around 1000 for 1 to 2 years. Then we have a long term target of around 1500 for 3 to 4 year horizon. Please have a talk with your personal fund advisor. Also, do your own research about the stock. Also, look through this company across all verticals before you put in any kind of money into a stock like LIC Housing Finance. Also, we always update to our viewers about our stock performance, all our stock recommendations on the last part of the video. Make sure you have a look at these, and then you can also track how we as a channel are performing, and then you can go about with your own investing. Also, don't forget to like and subscribe to our channel. Also, if you feel that we are giving you something good and we are educating you in a very good way, please share it with all your friends and family. Thank you.